Good morning, everyone. Today, we are discussing a significant milestone in Southeast Asian digital finance. Atome, a Singapore-based digital finance platform, has successfully closed the renewal and upsizing of its syndicated debt facility to 345 million of USD dollar. It is a substantial increase from the 200 million USD dollar facility secured in 2024. This presentation will cover what happened, why it happens, and the key implication for Atome, its lenders, and the broader Southeast Asian fintech landscape. In summary, Atome has renewed and significantly expanded its syndicated debt facility to 345 million USD dollar. This is a renewal and upsizing of its previous 200 million USD dollar facility from 2024. HSBC continues as the structuring bank and mandated lead arranger and book runner, but notably, DBS has now joined as an addition MLAP. Returning lenders include SMBC, Banduri Bank, and Cathay United Bank, while Fubon Bank and Shanghai Pudong Development Bank has joined as new participants. The fund will support Atome's BNPL, which is the Buy Now Pay Later business, consumer lending products, and the Atome Pay Later Anyway cut across the Singapore, Malaysia, and the Philippines. Why did lenders agree to upsize this facility so significantly? There are four key factors. First, Atome's finance performance has been exceptional, operating income up 63% to 236 million of USD dollar in 2024, followed by annualized net revenue exceeding 500 million USD dollar in 2025. Second, lender confidence is unmistakable. The facility grew for 73% within a single year, with not only all existing lenders returning, but also two major new banks joining the syndicate. Third, the Southeast Asia Buy Now Pay Later market is now worth 22 to 24 billion of USD dollar and growing at around 23% annually. This is a massive addressable market. Lastly, debt remains far less dilutive than equity, protecting the interests of Atome's existing shareholders, including SoftBank and Warburg Pincus. So let me explain the mechanics. This is not a new facility. This is a renewal and upsizing of existing 200 million USD dollar debt facility from 2024, now expanded to 345 million of USD dollar. HSBC continue as the structuring bank and mandated lead arranger and book runner. But importantly, DBS has now joined as an additional MLAP, a strong vote of confidence. The existing lenders, SMBC, Banduri Bank, and Cathay United Bank, all returned, and two new participants, Fubon Bank and Shanghai Pudong Development Bank, has joined the syndicate. The fund will be developed across the four core product areas. One is BNPL service, Buy Now Pay Later service, consumer lending, Atome Pay Later card, and insurance offerings across the three key markets, which is Singapore, Malaysia, and Philippines. Now we are continue with why lenders expanded. Lenders did not just renew, they upside the facility by 73%. Why? Look at the numbers. In 2024, Atome delivered a 63% increase in operating income to 236 million of USD dollar, while the GMV, which is the gross merchandise value, grew 50% to over 2 billion of USD dollar. And most importantly, they achieved the full year profitability for the first time. That's the threshold that transformed a startup into a sustainable business. But 2025 was even more impressive. By year-end, annualized net revenue had surpassed 500 million of USD dollar. Annualized GMV reached 6 billion of USD dollar. That's a tripling of GMV from 2024 levels. And in December 2025 alone, Atome recorded its strongest monthly GMV ever, representing more than 70% year-on-year growth. From a credit perspective, even using the most conservative estimates, the DSCR is around 4.7 times, meaning Atome earns nearly 5 times what it needs to service its debt. Leverage remains conservative at around 0.5 to 0.7 times debt to equity. This number gave the lenders complete confidence. To understand why this facility matters, we need to look at the broader market. Southeast Asia buy now pay later market is now worth 22 to 24 billion of USD dollar and is growing at about 22% annually. The region's digital economy surpassed 300 billion of USD dollar in 2025 and is projected to exceed 1 trillion USD dollar by 2030. What's driving this? First, at large underbanked population, many consumers have smartphones but no access to traditional credit card. Second, a young demographic, around 65% of Southeast Asians are under 35 years old and comfortable with digital credit. Third, for supportive regulation, authorities across the region have taken a measured approach focused on consumer protection rather than outright the restriction. This creates a perfect environment for buy now pay later platform. Regulatory compliance is non-negotiable for lenders of this caliber. In Singapore, Atome holds in-principle approval from MAS, which is the Monetary Authority of Singapore, for a major payment institution license, a rigorous validation of their compliant infrastructure. They are also signatory to the Buy Now Pay Later Code of Conduct. In Indonesia, their subsidiary Credit Pintar is fully licensed by OJK, registered with AFPI, and holds the ISO certificate for information security. In Philippines, there were disbursed over 2 million pay later anywhere card with up to 80% going to first-time cardholders. It's demonstrating both scale and responsible credit extension. This regulatory foundation gives HSBC, DBS, and other syndicate members the confidence to commit substantial capital. To add on to the previous slide, we can see all the banks as stated in this slide have been mentioned earlier. They have participated in here in this facility. So to add on, DBS is not just any bank. It's consistently ranked among the world best. Their participation signal that Atome has met the highest institutional standard for the credit risk management. So where will be the 345 million of USD dollar go? The funds are being deployed across the 4 core product areas. Buy now pay later service remain the foundation, but Atome is rapidly expanding into consumer lending, insurance, and saving products. The Atome Pay Later Anywhere card, which is a Mastercard-powered product, has been particularly successful, especially in Philippines. Over the 2 million cards have been disbursed there. Up to 80% of these are going to first-time cardholder, meaning to say that Atome is actually expanding financial inclusion, not just competing with existing credit card issuers. The Philippines is also Atome's fast-growing market, which is with the significant untappable potential given the country relatively low formal credit penetration. So as I mentioned earlier, risk management in Atome is the foundation of lender confidence. So in Atome, they use the AI-powered underwriting at every stage of the transaction lifecycle, from identity verification to credit risk assessment to transaction-level fraud detection. They have also integrated the generative AI to customer service and collection to improve efficiency while maintaining portfolio quality. The result is proven credit performance at scale. They have maintained disciplined underwriting while growing GMV from 2 billion to 6 billion USD dollar annualized. This combination of growth and discipline is what sets the Atome apart. What are the broader implications? For Atome, this is a less dilutive capital to fuel the profitable expansion. Exactly the right kind of the funding for a mature fintech platform that can accelerate the card issuance, insurance and saving product without giving up equity to existing shareholders like SoftBank and Warburg Pincus. For the lender, this provides exposure to a proven Southeast Asian fintech leader at a time when global fintech funding remains selective. DBS participation as MLAT is particularly significant, which is validate Atome's risk framework at the highest level. More broadly, these transactions show that the buy now pay later can be not just popular but profitable and scalable in Southeast Asia. It set a benchmark for regional fintech debt financing and signal that the Southeast Asia has matured as an investable market for global finance institutions. To conclude, Atome represents a strong fintech case because it shows how financial services can be embedded directly into everyday digital commerce. Its buy now pay later model improves the customer convenience and boosts the merchant sales, while its technology stack enables to real-time credit decision, smooth digital onboarding, and efficient payback management. Financially, the approach depends on balancing revenue from merchants and financial products against funding costs, credit losses, fraud risk, and operational expenses. Importantly, this study reminds us that the digital innovation must be measured by more than just growth. Buy now pay later platform has to prove that they can scale responsibly. Atome's success hints on several key elements: disciplined underwriting, transparent communication with customer, regulatory compliance, stable financing, and the ethical use of AI. If these elements are managed well, Atome can continue to serve as an important example of responsibly embedded finance in Southeast Asia. Thank you.